Hey there, everyone. It's Joe from Ainslie's Gold Silver Standard Insights, brought to you by goldsilverstandard.com and ainslieBullion.com.au. Today's topic is Pound plummets, Bank of England fails to calm the masses. Now, that was posted on the Ainslie website. I'll put a link below for you to follow along. And of course, we have Chris Tipper here to break down that news. And joining Chris today is Branko from the Ainslie team, and he also happened to have written today's article as well. So, Branko, welcome back to the show. And Chris, over to you.
Thanks, Joe. Today, we're once again looking at risk in our portfolios being driven by those increasing rates and inflation continuing to push the US dollar relentlessly higher. We're now at the point where the entire financial systems of major countries and economies from around the world are starting to break, and it is happening very quickly. We've been predicting this here on Insights and continue to watch it unfold as closely as we can. But the policy responses are causing real pain to Main Street and will therefore continue to flow into pressure in the stock markets around the world, which are now sitting right on the edge of breaking down below those previous lows established earlier this year. This pain is not just being tolerated by central banks, it's actually being encouraged by them. And they're prepared to turn everyone's lives upside down, basically, sacrificing the jobs of working families to get the inflation that they were ultimately responsible for creating back under control. It remains to be seen if governments and central banks can really stay the course, given just how much pain has already been experienced and is about to get even worse, really. But for now, things are not looking good for the average person who is not shielding from any of this. They're not shielded, from any of this chaos. As we're pushing into territory where a supercharged USD entering danger zones becomes increasingly volatile, today we have Branko with us to look at what is happening in two economies in particular, the UK and Japan, to give us some idea of what is happening there and what we can expect. These are major economies, so we need to be paying attention and protecting ourselves accordingly, as what happens there could be a dress rehearsal for what happens right here in the weeks and months ahead. So thanks for joining us again, Branko, and thanks for your research into this important topic for the news today.
Thanks for having me.
The first question I had was, what does a rapidly depreciating pound mean for the UK and its citizens? Because we've seen really the pound just fall off a cliff there. And this is obviously attributed to US dollar strength because that's the flip side of that trade. So what's that all about? Can you give us a little bit of background on that?
Yeah, so I think you said it great that the US dollar is very strong and the pound is very weak. So it's almost overly exacerbated how weak the pound is. And in terms of how UK citizens are going to be affected by this, you're going to see businesses that require imports, that require, other currencies, right? Yep. They're going to have to pay more on the pound. So their prices are going to go up and then their citizens are going to pay more for those same products. So domestic inflation is going to be significantly higher. And as we kind of all know in Australia, for example, inflation isn't like just some economic growth number that you don't really feel. You really feel the effects of inflation, right? Everyone's been to the grocery store, prices have shot up. So people in the UK are in for a rude awakening, and their inflation figure at 9.9% could get significantly worse.
So it's obviously very high, and it's been pretty much a straight line in the wrong direction for them at the moment. Is there a way out of this crisis for them, or are they stuck?
It's very difficult to see a way out in the short term. They could continue the rate rises that we're seeing. Their Bank of England central bank, they rose the interest rates by 50 basis points last week. So they could continue down that line, and that will hopefully ease things over the long term. But over the short term, it is difficult to see a way out, especially because consumer confidence in the pound is quite low. And so you're not going to really get that aggressive buying because everyone is really kind of worried about what's going on. So people are staying on the sidelines, they're not willing to buy up the pound. And then as a consequence, you're going to see that high inflation.
Sure. So I know, and you touched on this a little bit, but really part of the problem, as far as I can see it, is that you have two forces working against each other in the UK, because government policy tends to be about providing some relief to people, as is necessary because they're under a lot of stress. So does that work though? If you've got the Bank of England trying to increase pressure through increased rates, and you've got the government effectively working in the opposite direction, trying to relieve pressure, are they working against each other? Does it work?
Yeah, I think this is kind of the important point is got the government on one side trying to, in my opinion, kind of win votes, if I'm being honest, right? To give all these tax cuts, 45 billion in tax cuts, which is going to increase inflation, and the Bank of England trying to, kind of control inflation by raising rates. And so they're not actually achieving any goal. They're just pulling on like opposite ends of the string. They're not tugging in one direction. So it's going to be very difficult to achieve anything this way. And I think, most economists believe that these tax cuts are a poor decision, and it's only going to increase inflation and make things worse on top of what we're already seeing.
So I want to sort of turn attention a little bit to Japan, because a lot of people hold that up as the example of what happens when you really intervene for a very long time, because obviously Japan's had intervention for decades now. Does the UK situation where they're at the moment relate to Japan's situation in any way? Like, is there some comparisons we can make there about sort of how they got into this situation maybe, or what happens next based on what we've seen happen in Japan?
So in Japan, this time last year, the yen was at about 110 per US dollar, and now it's about 145. So it's also seen a massive kind of depreciation. And I think that there are a few key differences and key similarities that are of interest. So the first one I actually find interesting is that, their government and central bank are actually working in tandem, unlike what we have in England. So the central bank in Japan aren't raising rates, and it actually makes more sense for them not to do so because their inflation is only about 3%, which is, half of what Australia is at 6%, and,
about a third of the UK.
So it makes sense as to why they're not raising rates. And the government is kind of towing that line as well. However, they're also suffering the consequences of not raising rates in this high interest environment and seeing, a similar depreciation. And now we're seeing them, the Central Bank of Japan, having to actually intervene in the currency and try and hold it up. And that's, really not working at the moment. And I think that it's going to be interesting to see if the Central Bank of England is forced to do that as well.
So can we dig a little bit further into that? Because that intervention that happened, from what I could see on the charts, at least, didn't appear to do a lot for very long, because it did result in a little bit of weakness in the US dollar for a day, and then we were back at it. Do you think that if they were to do that with the pound, it would be effective? So do you think this idea of intervening in currencies actually works based on what you've seen with that Japan example?
I don't think it works, and I would actually liken it to when the Central Bank of England the other day tried to make some positive announcements about how they would control inflation. Just a blip on the screen, goes up a little bit and then we're back down, right? So people don't actually care about these kind of small, like they're not small, but
token
these
gestures.
It's more about like what's the broader trend, right? And I mean, if you look at a chart, it's blindly obvious. Pounds at like nearly a 50-year low. So difficult to see how an intervention or any kind of statement from the Central Bank of England is going to change this. And I think that if we continue down this track of the government and the central bank working in opposite directions, it's going to be a lot of pain for the people of England, the country, and their economy.
And that reflects on us here, because it's something we need to be aware of, because obviously that is a model, and we need to see if other countries attempt to replicate that model. It's not necessarily a good idea if it doesn't work. And something I've been thinking about is the potential for global intervention, whether we get all of the banks effectively lining up together. Do you have sort of any opinion on that, whether that would work?
Yeah, that's an interesting viewpoint. I mean, I think it's more likely that the Central Bank of England, right, if every country were to do it, their intervention would more likely work.
Yep.
I don't know if that's a good idea still. I do know that it would have rippling effects into different assets in the economy, which would be very interesting, because that'd be quite a significant event.
Yep.
I would say it makes the Central Bank of England more likely that their intervention would work, but on a global level, I still don't think it's what's best for the economy.
No, and we've seen a lot of history saying that intervention of any type like that ultimately doesn't work if it's not fixing the underlying problem. So that's always an issue, I suppose.
Yep.
So thank you so much for your insights and analysis on all of that today, Branko. We've a lot of things to keep watching closely because it is an important juncture. So it certainly helps to have people like you who can explain what's happening and help us interpret it all. So we really appreciate that.
Thanks for having me on. Look forward to seeing you next time.
Great. Thanks, Branko.
Well, thanks so much for being on the show again, Branko. And Chris, I'll see you on the next one. And for the audience, if you'd like to continue the conversation with Chris and Branko, head over to the Discord channel. That's discord.gg/gold. They'll be there for the next 1 or 2 hours after the upload of this video. So it's a perfect chance to ask your questions and give us some valuable feedback as well. So I also want you to subscribe to the YouTube channel for the wide range of informational videos that we offer 5 days a week. That's youtube.com/Ainslie Bullion. And while you're there, check out goldsilverstandard.com. That's bringing gold and silver into the digital world. As we always say here at the end, balance your wealth in an unbalanced world. Take care. We'll see you next time.